Kev, are we live?
Good to go. Hey guys, how's everybody doing? Welcome to We Talk Money episode 48.
Yellow.
Hey, what's going on?
It's weird because it's PM. It's nighttime.
Yes.
Dinner time.
Yeah, we're testing a different time here, guys. So let us know what you think.
Do you want them earlier? Do you want them later? I know we've got people literally from all over the world, so let us know what you guys think. This week was a little weird. We had a thrown off schedule, but we wanted to test this anyway. So the title for today is Bitcoin is at a really big tipping point, but also stonks are at kind of a pivotal moment. What's going on in you guys' world?
It feels like, Trav, tell me if you're feeling this way. It feels like the market is down so much, like on a percentage basis, but it's not. Like, it's not. Like the Nasdaq and the S&P are starting to look weak for sure, but like they're not down a lot. But
we're what, 8% off the highs on Nasdaq.
Yeah, if you look over the past, week of trading, it's kind of been consolidating, holding up a bit. But it feels like when you look at all the momentum and the growth and, all of that, like those stocks still look really weak. A lot of the market looks really weak. And it feels like we're just down a lot more to me.
Than it actually is. Yeah.
Wait, stonks can go down?
No, never.
Blasphemy.
Yeah.
Some of the momentum stocks are down 40, 50%. So that's why when you're looking at some of the individual stocks, some of the high flyers, those have gotten whacked.
If only you guys would have called that several months ago that was going to happen.
Has anybody checked in on Wall Street Bets? I mean, how are they doing?
I don't know. I mean, they're still smoking the hopium, so
Gamestop, not so.
It's in the long kiss of death. Well, we'll get into the charts, but I mean, this is the long kiss of death, right? After you get the rebound and the dead cat, and then that's where you go into that multi-month just kind of bleed out, right?
And we said that last week or the week before, and I think there was at least one comment kind of ridiculing that.
Yeah.
But I was like, hey, listen, I'm not saying it absolutely 100% is going to happen, but we've seen this chart play out across asset classes many times over the last 2 decades.
Yes. Yeah. Even Bitcoin, you know, I sense a lot of fear in the markets right now. Well, it's actually kind of an interesting mix of fear and greed. We'll talk about that. But anyway, guys, yeah, so today, here's what we're going to do. We're going to go through some charts. We're going to go through some news. Both on the crypto side, the stock side, and then just like the economy in general. One thing I wanted to kick this off with, because I know, you know, when markets go up a lot, emotions kind of rise, right? And everybody starts to get, you know, either freaked out because the anxiety of potential pullbacks, or FOMO because they missed out on gains, right? I actually surveyed this, I think, when was this? Last week? I asked my Twitter folks, I said, for you guys that were around in 2017, basically during the last boom and bust cycle, has your mental ability to hold crypto positions during bull trends increased or decreased? And it was like 75. So basically 3 out of 4 people said their confidence has increased, their ability to hold has increased, where 25% of people said it's actually decreased. And usually the reason for that is because of like PTSD, like, you know, they have like these bad memories from prior market cycles.
They got burned by the market. Yeah.
Yeah. So I just found this really interesting, and like I wanted to talk a little bit at some point today just about the mental side of holding positions, and especially like for me, my anxiety goes up the higher I am in the profit on a position. You know, drawdowns are easy because I predefine risk and get out, whatever. But like, you know, do you guys feel that as well in stock positions?
Yeah, I remember when the euphoria hit the fan, when things, you know, momentum stocks and many of the even value stuff that we were in, I felt like looking at the P&L every day, it gave me a little bit of anxiety because of that exact reason.
Yeah.
You want to make sure you know, do the right thing and you trade your plan right. And things were getting so euphoric that it almost felt like something was wrong.
Yeah. It's almost like you feel like a little anxious at it.
Yeah. I think the environment is what, you know, created that for me personally. Just the overall market environment. Just everything was going up 100, 200, 300% like that. And that's not normal. So that for me definitely created some anxiety.
So what do you do? How do you guys temper the anxiety that comes with that?
I scale.
Scale
out profits.
Yep.
Try to leave runners.
Yep.
You know, that's the way I kind of handle it. And think about the percentage gain that you're up. You know, and yes, obviously we don't know where the top is, but I think it's important to think, oh, I'm up 300% on this trade or on this investment, and I only expected to be up, you know, 200%. I need to think about that and really try to trade this with no regrets going forward.
Yeah. Trav, what about you, bud?
Same, yeah.
Yeah.
It's about just managing the positions and being okay with getting out maybe a little early on some stuff, and then also just continue to do work in maybe different unloved sectors or areas of the market that aren't getting a lot of love. Like I was trying to spend some time in some areas that I thought could be fruitful, even as others were seeing like the momentum side go so parabolic. I was trying to be a little bit contrarian there and try to find some stuff that was not in that mix, because I knew that there was going to be a shakeout at some point on that side of the fence.
Yeah. Awesome. All right. Well, let's go ahead and jump into some charts and look at some markets. Before we do that, guys, go ahead and smash the like button if you guys want to see more live streams like this.
Smash
it.
It's such a cheesy saying, but
I know.
it's so
like
true
it is.
because it really does make a difference in terms of our reach
Yeah.
on YouTube. And so we're trying to obviously...
Yeah, and we don't do the clickbaity bullshit like all the Moon Boys. So, you know, if you guys like, you know, down to earth, like objective education like this, let us know. And why don't we just do like a quick intro? I know there's probably some people that haven't heard of us before. Trav, why don't you give like a 10-second background on yourself real fast?
Yeah, I'm Travis, aka the Stock Geek. I've been a professional investor, worked at hedge funds for over a decade. My bread and butter is fundamental-based stock investing. And that's what I live and breathe and do. And so,
professional wake surfer on the weekends.
yeah, that's right. I've also had some operating experience at startups and done some angel investing and things like that. So there's other stuff in there, but you know,
So humble.
all stocks all the time.
Yeah, man. That's right.
And he's really smart.
Nikki?
I am first and foremost an investor and a trader. I actually started as a day trader, really focused on technical analysis. Then I met Travis, was introduced to fundamentals. Now my strategy is technical and fundamentally driven. I'm also a certified financial planner and a big finance nerd. So I pretty much everything relating to money, I'm trained on each subject of finance, whether it's estate planning or taxes or investing strategies. So that's it.
Awesome. Yeah, and for anybody that doesn't know me, I'm addicted to Bitcoin. I'm Chris Dunn, and I am an addict. And 2013, I fell down the rabbit hole and have not come out. No, but my skill set, my skill stack is that of a trader and investor as well. Have probably 10,000 plus hours in building systems and everything from algorithmic to discretionary stuff, and got frustrated with the financial markets. I saw them after the 2008 financial crisis go from something where the little guy could make money to something that was dominated by high frequency algorithms and pros like Travis. And I looked at Bitcoin and said, wow, this is a playground where you can make a shit ton of money, and it's also going to change the world. So went down that rabbit hole and have never come back.
You're amazing at recognizing trends before they happen.
I like to think so.
You really
like
are.
one of the cool kids. No, definitely
Yeah.
not. I'm the old guy now. I used to be the young guy, but that fades away over time.
That's all right. With age comes wisdom, right? Crypto
Exactly.
Speaking about wisdom, Papa Elon
OG. Uh-oh.
What about it?
today said you can now buy a Tesla with Bitcoin, so they are accepting Bitcoin. But what's even more important is the second tweet, where he says Bitcoin paid to Tesla will be retained as Bitcoin, not converted to fiat currency like a lot of the fake crypto adopters, right? Like some companies will say, yeah, we'll take Bitcoin, but we're going to immediately put it back into the USD shitcoin.
I would think people that are accepting Bitcoin are not converting it to fiat. I mean, I would think that'd be more than normal.
Well, that's what a rational person would do, right? Do you want fiat that's being printed into nothing, or do you want to hold hard money? So when you think about what Elon's doing, he's now in the business of selling cars to acquire Bitcoin.
But who's actually using their Bitcoin that they anticipate to appreciate to buy a car that depreciates?
Well, that's the question, right? Is like, okay, are you a hodler and you're like, no, I'm only going to hold my Bitcoin forever and I'm not going to spend any of it? I do both, right? Like have some for trading, have some for investing, have some for, shit hits the fan scenario where you never touch it in cold storage, and then have some that you actually spend to improve your quality of life. What a concept. I think we talked about this a couple weeks ago. I saw a couple guys getting shit on Twitter because they like bought a house with their Bitcoin and they were like showing like, oh my God, thank you, Bitcoin. Like my life is better. I bought this house. And people are like, you're such an idiot. Why would you sell that? And I'm like, because they improved the quality of their life through an asset. That's the whole point. Who cares how many Satoshis you have if it doesn't improve the quality of your life? And if you make a decision to spend that on something that makes you happier, healthier, or better, why the hell not?
Touche.
Yeah. So putting it in a depreciating asset like a car, I don't know. I mean, you could make a comment on that either way, but
yeah. I mean, you bought a boat. You both bought a boat.
Yeah. How many happy points do you get out of it? That's what really matters.
Yeah.
And as of, I guess, just like an hour ago, I think, let me see, we'll get to that in a second. Here we go. Fidelity just filed for a Bitcoin ETF. Trav, you've been calling this. I think you said this year, right? You think it's going to happen this year?
I do.
I haven't looked at this yet, but assuming that, I mean, they're coming. They're coming.
The institutions finally figured it out and said, all right, this is a real asset class. We want to make money on it.
Yep.
And now you don't just have upstarts like Grayscale filing for ETFs or other similar, crypto-focused places like that, but you have large asset managers like Fidelity. I'm sure you'll get BlackRock. You'll get the rest of the
Schwab.
Yep, all the big ETF houses.
Yep.
Vanguard. They're gonna be gunning for this because they've already seen also the examples from like Canada where their early ETF had $500 million of assets under management within like 2 weeks of opening up their ETF. So
people are hungry for it, right? Asset managers are hungry to be able to offer it.
Yep.
And so why is this a tipping point, right? Like, why could this be the major tipping point for Bitcoin beyond what we've already seen? Let's look at what happened with gold, right? In the early 2000s, gold ETFs got approved somewhere through here, and then that kicked us off into, you know, a multi-year bull run. So will that happen with Bitcoin exactly like this? Probably not exactly like this, but when you think about how much capital that opens up, right? And the people that get access to it, and, you know, we're already seeing the big boys offering it to their wealthier clients. Like, when the average Joe has more opportunities to get into Bitcoin, and they don't have to worry about the custodial aspect of holding their private keys. Right or wrong, right? We prefer to do that. Some people are like, look, I just want to own the ETF. All right, fine, you know, but make sure, obviously, it's a good ETF and it's not on some scammy exchange. But yeah, I don't know. I think that could be a big tipping point.
Yeah, I think it's good to have players like Fidelity that have a lot of history and trust in a lot of their financial products, you know, behind them. So something like a Bitcoin ETF through Fidelity or iShares or someone like that, Vanguard, is going to attract a lot of interest in assets, and especially people who can't do crypto directly in their IRAs and 401ks, who haven't opened, you know, crypto focused IRAs. Like, this is gonna be such a great product for them.
Yep.
What I love the most is it simplifies the taxes, because right now, if you want to buy and sell Bitcoin or crypto in general, it's a tax nightmare for most people. The tracking of it, you know, unless you're doing a self-directed IRA, of course. But I think that it's going to be nice to just put it in tax deferred or tax advantage, pull it out in retirement. Don't worry about it. I think that's going to be big for people wanting to buy these ETFs in retirement accounts.
Yep. Awesome. And then kind of on the other side of the coin, no pun intended, you know, you've got Fed Powell. Like, okay, so governments right now are, I feel like, kind of scrambling. And we've been talking about central bank digital currencies for a while. But you're starting to see these guys just say some really ridiculous stuff. And, you know, like in one breath, they're saying, okay, you know, Jerome Powell said Bitcoin is, you know, more of a substitute for gold than the dollar. And he says, well, it's a store of wealth. Is it really a currency? And they're coming out saying, like, they're going to try to compete, you know, and they're going to not be as, or they're going to have more privacy built into the U.S. digital currency than China is looking to do, obviously. Like, China was even trying to, I guess, kind of fake that they were going to have some kind of privacy, saying, oh, the only thing you need is a cell phone number, but they have that linked to every human individually. So I don't know. I think if I were a Fed chairperson, I would be scared and confused right now. Like, so seeing this coming down and knowing it's like an unstoppable wave, and you can just see it with their comments. Like, some of the stuff just doesn't make much sense to me. I don't know. What do you guys make of it?
Yeah, I think they come from a world that makes it difficult for them to truly, like, grasp the potential and the applications of cryptocurrency. Like, they're starting to slowly get it more and more, but, like, you know, their whole career, their whole academic foundations are built around government controlled fiat currency, around traditional asset classes, analyzing, you know, traditional asset classes, basically. So it's not surprising to me that their comments are confusing or just
misguided.
Yeah. Great word. So I don't read too much into this, to be honest.
Yeah.
You know,
at the end of the day, does it matter? Like, it's going to be a fight. It's going to be messy in the short to medium term, but I think we know the outcome, right?
Yeah.
Does anybody know if Powell owns any Bitcoin?
Even if he did, he probably wouldn't admit
He
it.
probably wouldn't, right? Wouldn't
Yeah.
that be something, though?
Yeah.
He's like got a stash.
Yeah. Well, and if I were the head of a state, and I look at stuff like this, right? Like, so crypto is banned in Morocco, but Bitcoin purchases are soaring, right? Like, when a country bans something, people go, okay, why did they do that? We want that, right?
Yeah.
It's like the kid that they, you know, is told they can't have candy. They want more candy. But just look at what happened to trading volumes. So peer-to-peer trading volumes in Morocco over the past few years, and after their little ban, it's like it's going through the roof, right? And in places where they're seeing high inflation And any country that places currency controls on people, that's going to make people want it more, not less.
Absolutely.
Right. And India, man, India has the potential to do something really big and right for their citizens here. But I've been saying this since the early days of Bitcoin. Countries that ban or severely limit it are only stealing future prosperity from their citizens. They're not making their lives better. They're not protecting them. They're fucking with their future wealth and their future prosperity. And it was very strange seeing the head of finance a week or two ago talk about this. You can just tell, again, just like Jerome Powell, they're just confused and they don't know what to do. And so they think the best thing to do is ban it. And it's like, nope, people are going to use it anyway. And by you banning it, you're only flaming the fire.
On the U.S. side with Powell, it might actually be a good sign that he views Bitcoin as more of a competitor to gold than the actual U.S. dollar
I
currency.
agree 1,000%.
If he doesn't see it as a threat to the U.S. dollar currency, then there's really not as much to worry about with like a ban or something like that. He's just like, oh, it's another asset class. It's digital gold. So
Good point.
That makes it less of a threat.
Yeah. I guess if he was sitting there saying like, oh man, this is a threat to our infrastructure. And I think they're kind of toning down on the criminal narrative, oh, this is only for drug dealers and criminals. Well, actually, no, there's a massive use case.
When you got Fidelity in here trying to create an ETF to stuff it in people's retirement accounts.
Yeah.
I mean, there's obviously advantages here, monetary advantages for the institutions and, for the government to be able to tax the profits and for the institutions to make money on the products. And I mean, there are, it's not all bad, for them.
Yeah. I mean, as long as they can get some tax revenue from it. And I don't know.
In the U.S., Powell's not totally wrong either in the sense that in the U.S., we haven't seen as much evidence that Bitcoin is being used to go buy Teslas or to be used as a currency alternative in terms of high volumes of transactions for like goods and services. There is some of that for sure, but in the U.S., we haven't seen as much evidence of that. I think it is definitely more of a use case for those countries that are facing devaluation of their currencies or inflation that's running out of control.
Yeah, or repressive governments. I think I mentioned this last week. My buddy that lives in Myanmar, they froze all his bank accounts, and he's like, shit, I have access to no cash, and I have a staff I got to pay. So I sent him some Bitcoin. In 10 minutes, he was able to go meet somebody, get cash for Bitcoin, and like survive. So those are like the use cases that a lot of people in the West just don't think about.
Yeah.
Yeah. Okay, moving on. So Travis's $69 million NFT that he purchased from Beeple.
I wish, yeah.
So people were like really raging out today on Twitter about this, going, oh my God, I can't believe this guy sold most of his Ethereum or a large chunk of his Ethereum for dollars. And it's like... Oh, and then he also made some comments saying like it is absolutely a bubble right now. And, we've been talking about this. Like this is the first hype cycle wave, right? There's going to be a crash. The media is going to come out and say, oh, NFTs were a scam all along. It's just like ICOs. And then that plateau of productivity that comes next is what I'm really excited about. Digital rights to books, movies, music, some trading stuff, some trading cards and some digital art, but more so like the video game and that type of stuff, I think is where we're leaning into. But I just find it funny anytime somebody like sells, and that's when things are getting riskier on the prices in Bitcoin, because you start seeing people shame others for taking profit and for selling. Like I've got strong hands, I got diamond hands. Why are you selling? It's like I won't sell if you won't sell. Bullshit. That's not how the market's
work. Business and let me manage my money the way I want to manage.
Exactly.
Yeah, is it prudent for Beeple to have 99.999% of his net worth in Ethereum?
No,
of course not.
Yeah.
Also, this amount of earnings that he's had over the last 6 to 12 months probably changed his life completely, and his children and his children's children's lives.
Yeah.
Right? Like,
take it, diversify it, preserve it.
Yep. Yeah, I think it makes sense to hold, obviously, a percentage of your net worth long-term that you never touch. That's your HODL, that's your cold storage. But you can do more than just HODL. And like whatever those gains are, it's great. It's 200% average annualized returns since Bitcoin's inception. But there's other things you can do to diversify out of that, to make money when you're in a bear market, to even make more than 200% in other scenarios. So I don't know. You don't have to be all in. And I just get worried when I start seeing people shame other people for taking profit or like cashing out of whatever income they do make. Yeah. So, all right, moving on. Let's talk about the housing market. We actually had a bunch of questions last week on this that we didn't get to. Nikki, what do you want to say about this?
I actually got a question in the community from someone the other day too, about foreclosures. So we can touch on that too. But this was your link. But I believe it was, there's more like realtors.
Oh yeah, I did share this. Yeah, there's more real estate agents now than homes for sale in the U.S. Yeah.
That's a tough gig, huh?
Yeah. Pretty wild. I definitely think that this is a space that's going to have massive disruption, and you know, there's got to be scale. It's the most inefficient, annoying process that anybody could go through, and it's the largest purchase you'll ever make, right?
Yeah.
So.
Yeah, and a lot of people are starting to talk about the foreclosures that are, potentially looming in our future. And, to that, I think, for one, yes, there are going to be some foreclosures that come down the pipeline, but there's also the latest stimulus bill. There's actually a fund for homeowners to help them with, mortgage payments that they have due that they can't make.
Yeah.
So there's billions of dollars there. I think it was like $9 billion in a fund for that. So I believe people are going to be able to get relief if they are, have a lot of back mortgage payments that they have to make. But the other thing is, I think a lot of mortgage companies are going to be working with people that potentially are going to foreclose with payment plans, or putting the payments on the back end of the loan.
Yeah.
Or, they'll, between the assistants and the companies working with them, I don't know if we're going to see this crash the market, potential foreclosures coming out. And also, I think that there's so much demand for real estate right now, especially in certain areas, that foreclosures are going to get eaten up like that.
Yeah.
So.
Yeah, I agree. I think instead of letting another 2008 happen, they're obviously going to print more dollars, but they're going to encourage and incentivize, like you said, forbearance plans and re-amortization schedules.
Boom.
It's like you're behind 3 months. All right, we're just going to re-amortize. I hate that word. Re-amortize that.
Amortize.
Yeah. We're gonna reset your payment schedule. That way, we're not screwed as the lender. You're not screwed as the homeowner. Like they don't want the house back. They don't care about your asset. They want the payment with the interest. So yeah, I agree with you.
Yeah. And I don't foresee potential foreclosures doing anything necessarily to the stock market either.
Yeah.
I think that was a concern as well.
So are you guys still bullish on like retail REITs, like Mac and stuff like that?
Well,
opening up a can of worms here.
Yeah, yes and no. There's some company specific things with Mac that both I thought were interesting and made me bullish on the stock when it was trading at $5. But also some concerns in the near term too about like their balance sheet, what they're doing with the refinancing of their credit facility. They still need to get that done. The window's getting a little tight. Yeah. I'm a little concerned about that, to be honest. Generally though, like in retail overall, I think retailers are looking pretty strong. We're seeing comments already from some of the retailers that they're seeing a re-acceleration in foot traffic. And of course you have, at least in the US, you've got, I think, a significant amount of people now being vaccinated. And so like, I think you're starting to see that reopening. Yeah. And you're starting to see the foot traffic return. So I think from a overall like retailer perspective, things are continue to get better. Like Williams-Sonoma, as an example, last week reported earnings. Stock gapped up because they're seeing significant return of foot traffic. Plus, they're still doing well on the online side. Consumers have all this stimulus money to spend, right? So pretty good. I think, like I said, like malls in general, the B class and the C class malls generally are not in a good position, and I don't think the reopening really helps that longer term. Yeah. Maybe it gives them a little lifeline in short term.
Yeah, they were dying anyway.
Yeah. They're going to have to get repurposed over time. Even Mac, which has a lot of Class A properties in its portfolio, it's predominantly Class A. They've got some duds they're going to have to deal with, and some empty spaces they're going to have to deal with, like Sears bankruptcy left some open boxes. So I would say, it's hard to give you like a one answer there. Yeah. Like I think some mall companies are going to continue to be really challenged. The retailers themselves, I think, are doing pretty well, starting to see some improvements. And then I think the Class A mall owners like Simon and Mac, they'll probably be able to get through this all right. It's going to take some transition period in the next year or two.
Yeah.
And then obviously other sectors of the real estate market, commercial real estate. With inflation potentially coming and inflating asset prices and housing prices potentially going up with that, and other types of real estate, not just residential. I don't know. Valuations or certain just real estate in general could end up inflating, and the REITs may end up holding up well as inflation raises prices.
Yeah,
it's kind of hard to say.
Well, I guess the risk there is the work from home movement on the
Right.
corporate space, right?
Right, yeah.
Like I was hearing some stats today that even some companies you wouldn't think that are like, just real progressive tech, or even telling their like 30% of their workforce they can stay home forever now. So I think that's going to be a much bigger percentage than most people even realize, like going into next year.
And is that going to kind of balance out, commercial real estate and, people having these hybrid work environments with inflation happening? I don't know. What does that all look like? There's just a lot at play.
Yep. Yeah, we got some people freaking out in chat. Bitcoin's pulling back a little bit. Like I said, the emotions are heavy, right? Anytime prices are high, you get obviously people that are emotional no matter what happens. But just taking a look real quick, if we dive into the chart, we've been talking about this price structure for, really since the beginning of the year. Once we broke out above 20K, this is where things just really got heated. And we've had 1, 2, 3 pushes higher. And we stabbed above 61K and did kind of like a trap breakout. And then right now, over the past couple of months, 53K has been a really solid magnet, meaning anytime we get above it, we pull back to it. Anytime we get below it, we pull back above to it. So if you drill down hourly, we can see what's happening right here. And this is just kind of a zoomed in perspective on that. And actually what this timeline is down here is, as of today, it's like right around the same amount of time that we had on the last consolidation, right? So the last consolidation was from when we peaked out here in early January, and then we had the Elon tweet or the Tesla announcement, which drove prices higher than 43K on this breakout. This is when Tesla said they were buying $1.5 billion worth of Bitcoin. And then you can see we've just kind of been consolidating up above that. And we've got some trend lines of support, trend lines of resistance. And anytime you get kind of inside of this zone, this is where it gets really dangerous for people to overthink price action. And that's why I like to really zoom out and stay focused on the bigger picture, because you could go down to a 5 minute and be like, oh my God, Bitcoin's losing its mind, it's dumping. And look, this we could look back a year from now and this could be the high. But, as far as like planning my trades and trading my plans, I just stay focused on the big picture, and I don't let myself get emotionally rocked on every little pop to the upside or the downside.
Well, markets are weak right now all around, too. So this is probably to be expected. Everything's kind of moving in tandem at the moment.
Yeah, and the thing that's kind of freaked me out the past couple of months is market sentiment. Everybody is bullish.
Yes.
Right. And when everybody that wants to buy has bought, you need pullbacks. You need to scare people out so they can either rebuy or reload other market participants. And so this bull trend is not going to go without deep pullbacks. For anybody that wasn't around in 2017, we had 7 or 8 pullbacks over 35%. And most people can't stomach that.
Yeah. And we're talking about a 10% pullback on a 5-day time period here. For Bitcoin especially, given the historical volatility, that's not a crash.
Yeah.
I think maybe people are overusing the word crash.
Yeah.
Yes.
All the time.
Yeah. All the time.
Yes.
A true crash feels like March of 2020. That's what a crash feels like.
Yes. When you're down 50% in less than 48 hours, and people are, the suicide hotlines on the top of the Bitcoin subreddit, and everybody's rage quitting. Oh yeah. That's a signal that, things are in the depths of hell, which is usually the best time to buy. But most people wait until it's a year after the bull market started to buy. And then they're the ones that of course you would have more anxiety. Like if you have an average cost basis of $50,000, like if that's where you first started buying Bitcoin, you're a lot more nervous than if you got in with us down in the 4, 5, 6, 7K range.
Exactly.
Right?
And that same thing is translating over into like the momentum stocks and, you know, the growth stocks. I mean, people that were YOLOing into these things with no risk analysis at all at the highs.
Yeah.
With leverage.
With leverage. They're hurting right now.
Yeah.
Big time.
Yep.
And this is the reality check that we were all afraid was going to happen, unfortunately. But because the markets.
And it needs to happen, right? It's healthy.
Well, this actually is a good segue into the retail traders.
Oh, yeah.
That are up.
Yeah, you've got a chart here.
Because actually I was listening to Danielle Booth. I can't remember her middle. DiMartino. She's got a long name. I was listening to an interview with her, and this is actually a slide from that she had. And basically what my interpretation from listening to her is retail investors obviously have been increasing over the years, over the past decade.
Yeah.
Looks like retail investors have doubled in terms of percentage, you know, went from 10%
of
to 20%.
the market activity.
Yeah. And so basically she's kind of seeing this as market top signals,
right? When you get more retail buying larger percentages,
right? And I don't know, would you agree with that sentiment, or is that kind of?
Yeah, I think there's some data that suggests that also happened in the .com bubble and a few other time periods where the heavy increase in order flow from retail share actually did correlate a little bit with the market cycle.
Yeah,
and like just prior to like a market sell-off, and it makes sense, right? Like these are your low information, I mean, on average, right? There's some retail investors and traders that are very good, but on average, as a group, the retail investors are the lower information, less trained group. They tend to be more high beta, high risk. And so when that percentage gets really high in terms of the total order volume, then yeah, that tends to be a signal that we're in a frothy market environment. And almost every time we're in a super frothy market environment, there is a correction at some point.
Yeah, and obviously stimulus, Wall Street bets, all of that, you know, probably helped this along, and it got more retail traders in the markets, obviously, by the numbers here.
Yeah.
But
which is good, by the way. Like we want more retail in, but we want them to do it the right way and not this GME shit, you know, like actually learn the right way to invest.
You know, it's funny because I was watching that show on CBS or whatever. It was Gamestop. It was like a whole
like a
expose
on
the GameStop situation, and they were interviewing people that were on Wall Street bets and people that bought the stock, and you know, listening to them talk about their reasoning behind. I came into this money and I decided, you know, I was gonna do this and follow these people and, you know, stick it to the man.
Yeah.
And as a financial planner, sometimes it can be hard to listen to what some of these people say, because obviously, like, most people aren't trained on proper money management and the right way to do things, and like they may have been ignoring other parts of their financial lives that they could have used that money for, or contributing to retirement in a safer way, and then they, you know, went into GameStop and bought it, you know, $3.50 a share, and now they're gonna probably lose a lot of their money, if not most of it. And it's just it's heartbreaking. Like, I understand that, you know, there were jokes behind it, and yes, it was funny. We got lots of memes. Great. I even traded GameStop for the short squeeze myself, but in a much different way than these people did. It kind of is heartbreaking, and I just encourage people, if that's something that happened to you and you've lost a lot of money with GameStop or retail trading or following TikTok, you know, try to educate yourself. Like, you can recover from here and invest and manage your money the right way. You can.
And also I would say, like, don't feel bad, because that's how most people come into the markets, right? Like I came in day trading futures and like blew out my first few accounts, like right at the tail end of high school, going, man, I heard this is the way to get rich quick, right? And then you quickly learn, nope, the markets will punish you if you go in an undisciplined way eventually, right? You might get lucky, and then boom, you get slapped. You have a story like that too, Trav, right? Like you came in, what were you doing?
Oh, yeah. I mean, I did a similar thing. I you know, started doing some heavy options stuff in college, and definitely blew up blew up a small account at one point.
Yeah.
Just making stupid trades, like really uninformed, like, oh, I think the stock's going to go up on earnings with no real intel or due diligence, and just like playing it via options, which are obviously very high risk, high reward. And eventually you do that enough times, and without real edge behind it, you're gonna blow out.
Yeah.
Yeah.
It's like if you go play craps and you're like, I'm gonna put it all on red, and you win. Put it all on red again. Put it all on red. Eventually, you're gonna get blacked out.
Yeah.
Right. Eventually, you're gonna get wiped out. And I always say, like, you know, you got to first learn how to survive and then thrive.
Yeah.
Because you're swimming in a sea of sharks.
One thing that's interesting about the GameStop thing to me is it's become almost a religion. It's become a dogmatic thing. Fight the big hedge funds, fight Melvin Capital, put all my money in it. We got this. We're going to ape to the moon, you know? And it's like, okay. But like when trades become like a religion, that's real dangerous.
Yeah.
You start to put way too much of your position sizing into it, right? Like your position sizes become way too big. I mean, some of these Wall Street bettors are putting not only 100% of their portfolio, but plus margin into this stuff.
Yeah.
Out of the money options at 800 strikes and stuff like that. It's crazy.
Money that they probably could have paid down debts with, or you know, something like that.
It's just crazy. It's like, okay, look, I get the idea you wanted to stick it to Wall Street, whoever that is that you define as Wall Street. I get it that you think there's shenanigans being played on the short side. Some of that probably isn't actually correct, first of all. But second of all, even if some of that is correct, it doesn't mean the trade is a good setup at $300, $350 a share after it's already up 2,000% in 3 weeks, right?
Yep.
That's why we found this trade when GME was at $4 per share. We found this trade. We tweeted about it. Like we're on record.
We took it.
Yeah, we nailed it. Well, I shouldn't say that.
Yeah, we didn't nail it because we sold right before the big.
Yeah, we sold.
You nailed the entry.
The entry.
Yeah.
We nailed the entry. We didn't nail the selling at the right place. But the idea here is that, like, you know, trading and investing is about putting your biases mostly aside. Like, even though, like, for instance, you have been a crypto OG and you've been pounding the table on the potential for crypto to change the financial system in the world and become a new asset class, there are still times where you sold it or you traded out of it.
Yeah.
Because you're not, like, it's not your religion.
Yeah. Some people are surprised when they're like, what do you mean you don't have 99% of your net worth in Bitcoin? I'm like, because I know this fucking thing draws down massively, and I can't stomach 80% drawdown on 100% of my wealth.
Yeah.
I'd be depressed.
Yeah.
I would like go cry in a corner. Some people might have stronger hands than me or whatever, but my comfort level is somewhere around 50%. And even that for a lot of people is a super high risk tolerance. So it's different for everybody, right? Some people are like, oh, a 1 or 2% allocation in crypto is high. Other people are like, Chris, you're a wimp for not having 100%. I'm like, dude, you do you, boo-boo. Like, we've all got our own risk tolerances. And having been through every damn market cycle in Bitcoin, I know the pain, and I know I know how people behave, and I know how I want to behave through these things. So people, you just got to dial in what your own risk tolerances. Don't listen to anybody.
Yeah, I feel like we need a middle ground between paper hands and diamond hands.
Yeah.
Like rubber hands or something
like
Or like
right.
Yes.
This whole diamond hands
plastic
thing
hands.
Yes, this whole diamond hands thing has gotten so out of hand. Pun intended. Because, like, especially on a stock that goes up 2,000% in a matter of a month, like, maybe holding some of the position as a runner makes sense, but, like, Jesus, you got to take profit at some point on something like that, something that's so speculative. And I think with GME, there's actually some business progress happening. Like, I actually like what Cohen and some of the board members are doing, and some of the new management team additions, and it's not showing up in the financials really too much yet. But I actually think there's some interesting things fundamentally happening, but I would certainly not put 100% of my portfolio in it. Hell no. Yeah. Especially not at 300 a share. So there is a price at which some position size actually probably makes some sense.
Yeah. Talking about insane valuations, let's talk ARK's price targets for Tesla in 2025. Here we go. So this is so strange, right? Because they've done so well, right? And they've been so right. Kathy has been
for the wrong reasons.
Right. But, like, at some point you got to ask, like, okay, is it ridiculous, Are these numbers ridiculous, or are they visionaries and we just don't get
The
it?
numbers are ridiculous.
Okay.
Well,
The numbers don't make any logical sense. The numbers are ridiculous.
So what are the numbers, Trav? Why don't you walk us through this?
Okay.
oh,
A $3,000 2025 price target. Remember, this is only 4 years away,
Yeah.
essentially, or maybe 5. I
$3
guess if you're talking about the end of
trillion.
2025. Yes, a $3,000 Tesla price target is at least a $3 trillion market cap. Now, U.S. GDP alone is what, 20 or 25 trillion. So, like, you're talking about one company becoming a major percentage of GDP, right? Of the largest economy in the world. That's number one. That's just kind of like a gut check thing. But, there are trillion-dollar companies out there, Apple, Amazon, etc. But what makes this so absurd is when you dive in, if you scroll down, you actually one other thing makes this very absurd, just from a high level. A bear case. First of all, I love doing scenarios. In all my models, I like to have a base case, a bull case, and a bear case.
Yes.
Your bear case is a downside case. It is meant to capture what happens when a number of my assumptions are wrong on the downside, or there's a major macroeconomic event that causes my assumptions to all be too optimistic. A bear case usually gets you to a share price that's significantly lower than the current share price.
Right.
It defines your downside. Their bear case is a double in the stock. No, their bear case is more than a double in
Yeah,
the
I
stock
think it's
from
more
today's
than a
price.
double.
So basically, they are saying there's no way that Tesla goes down.
Basically.
well,
Yeah.
yeah. Basically.
They will try to weasel out of this by saying, well, this is on the probability curve, this is like a 2 sigma or 3 sigma. It's not the total left tail end.
Right.
But regardless of their babble about the statistics of it, a bear case price target should not be 2x or 2.5x what the current stock price is.
So what would that mean for valuations? Like how profitable would they have to be? Why don't we get into the details
So
here?
what makes this even more absurd is when you actually dive into the assumptions. And by the way, I do want to say before we talk a little bit about these assumptions, ARK gets credit for nailing Tesla before. A couple years ago in 2018, they put out a price target on Tesla at the time that was like split adjusted. I think it was like if you take today's price and you account for the share split, they essentially put out like a several $1,000 price target. And if you adjust for the share split, Tesla actually did hit that price target. And so they get credit for that by calling it, and no one else thought it could go that high. No one thought Tesla was going to go up 700% last year, right, and be worth $1 trillion plus, at least not in the near term. So they get credit for that. But if you go back and you look at their old model, and you look at the assumptions in that model, their assumptions were actually very far off. They had very optimistic assumptions. Tesla has not hit those assumptions from a fundamental business standpoint. Tesla has made progress. They've grown. They've sold a lot of cars. They got to 500,000 cars. But Tesla has 0 robo-taxis on the road. ARK's old model said that they were going to have several 100,000 and I think eventually several million robo-taxis on the road, that they would have a self-driving division, that the energy division, the solar division were going to grow by 2020 to be producing multiple billions of dollars or tens of billions of dollars of revenue. None of those previous projections were hit. The share price was the one thing they got right. Mm-hmm. So they were right in terms of the share price, but they were not right in terms of their model assumptions from the last model.
Yeah.
Now let's talk about this model. This model is even more absurd than the last model. I believe that ARK put out this model for PR. ARK is doing this to splash headlines, to get the attention, to make waves, right? But look at some of these things. Tesla goes from 500,000 cars sold in 2020. Within 5 years, is selling 10 times that amount, 5 million cars, right? And this is in the bear case. In the bull case, they're selling 10 million cars. They 20x. Do you know how large the size of the U.S. car market, new car market is?
17
Tell us,
million.
Trav.
Thank you.
17
17 million.
So now some of this is going to be China and Europe, but again, probably embedded in this number would probably, I would guess, be about 5 million cars sold in the U.S. So Tesla becomes more than a quarter of the U.S. car market within 5 years. Don't see it happening. They don't even have enough factories to produce that amount currently.
And also, the point that I made with you was that by that time, a lot of people may not even own cars. They may not even want to buy cars
Yeah.
because the demand will be lower because they can get everything delivered to their house, or they can get a robo taxi to come pick them up and take them where they need to go. Why would you buy a car?
Yeah.
Right. Like, Or I mean, that was a point.
That's a great point, though, because actually their model makes this assumption that they're going to be selling all these cars, but it also makes the assumption that they're going to be running this massive autonomous ride-hailing service. You can't really have both. If you believe that the autonomous robo-taxi thing is going to become huge within 5 years, then the total number of used cars sold to consumers is going to plummet. Those autonomous car networks, when they become a thing, will become so efficient and actually will reduce the number of cars sold dramatically. Because if you think about it, if you have a network of fleet, our cars, we drive, 5% of the time or maybe even less? Your car sits in a parking lot most of the time.
Yeah. So shared ownership is going to be a massive thing in the future.
Absolutely. So shared ownership just means total cars that are needed to ferry people around are way less. So that's one thing right there, is like, if you believe all these cars are going to be sold and you believe autonomous ride hail is a massive business, those don't really coexist.
So their bear case is 0 autonomous ride service, and they have 5 million cars.
$0 of autonomous ride hail, but 42 billion of human-driven ride hail. So their bear case assumes that Tesla becomes larger than Lyft and Uber combined in 5 years. Tesla has 0 ride-hailing business today. So from 0, they become better and bigger than Uber and Lyft combined globally.
Wow.
Is that reasonable for a bear case?
So I've actually been scanning through the chat here, and I think Benjamin has figured it out. He says Tesla's bear case is they just retire the car division and just hodl Bitcoin. Yeah, there we go. Who needs cars when you got Bitcoin?
I know. That's the plan all along.
Yeah. No, I mean, Trav, I'm glad you point this out, because whenever I'm perusing stock YouTube, and I'm looking at, FinTwit and looking at basically the popular market sentiment around Tesla, bears get, shit on all the time. And it is one of these scenarios where the market is so one-sided. And I feel like this analysis right here could be a meme in a couple of years, where you look back and it's like, wow, you had a bear case of a double. Like, what the hell?
Yeah. Chris Bloomstrand on Twitter, I believe he's a money manager or a researcher, but he had a great thread just on the insurance business alone, because he's pretty familiar with the insurance industry. He's invested, I think, in some insurance companies like Progressive and et cetera. Berkshire Hathaway has Geico, of course. These are large auto insurance companies. And, Tesla doesn't even underwrite its own insurance. And he goes on to say, this is one of the more ridiculous things about this model from ARK, is that they have, in a bear case, Tesla becoming a major insurance carrier that does 23 billion of auto insurance in a bear case. So they go from not being an insurance company today to, within 5 years, becoming one of the 3 largest auto insurance companies in North America, competing against very well-funded companies like Progressive and Geico, and somehow winning a dominant share of the market and doing 23 billion in insurance revenue in a bear case.
Yeah. Woo. So Trav, I'm looking for people that are going to tell us why we're wrong, right?
Yeah.
Because look, our egos aren't attached to this, right? Like, we don't care. We have opinions. We come to conclusions. People that are listening, if you disagree or you think we're missing something, let us know. It's not going to hurt our feelings.
Yeah.
So I got a comment. Mick says, I think you guys are thinking too narrow from the big city and U.S. based. It's a whole lot of global world out there, especially where we're heading with cryptos. So what do you make with that? I mean, are these numbers taking into consideration global sales as well?
Yeah, I mean, ARK's numbers are definitely projecting global, but the interesting thing is, and Tesla has opened a factory in China, and they are building a factory in Germany, and they do sell cars in Europe and Asia in addition to the U.S. right now.
Yeah.
So, yes, I mean, I do think it makes sense if you're modeling a company like Tesla to think about the global demand. And we were talking about the 17 million U.S. car market new. I believe globally the new car market is somewhere around 40 million units globally for new cars. So even if you expand it to the full global market, which, again, Tesla's not really in certain places like South America where the cars, the Tesla cars cost a lot. Your average GDP per capita in most countries in South America or Africa can't afford Teslas. There's just a very small population there that can afford them.
Yeah.
So that 40 million of total annual car volume is not all applicable to Tesla. You have to look at the luxury segment, which is a smaller part of that. So even though we were focused on the US when we were criticizing these numbers, I think if you actually break it down further, you can expand the numbers globally, but then you got to contract the numbers again to account for the actual segment that Tesla's in.
Yeah.
So net, it doesn't really matter. These I think, when I look at these numbers, I still think they're absurd.
Yeah.
I will say, is it possible? Is it within the realm of possibility that Tesla could produce numbers like, or what are in ARK's cases? I think certainly it is within the realm of possibility that they could become dominant in auto insurance, energy, EVs. A lot of other automakers have, been slow to issue, to come out with EV models. I just think if you're betting on that, as your base case, I just don't think that's very likely.
But the competition is coming. It's here.
I mean, the Volkswagen ID4 is out now. They're taking orders now in North America, and they'll be shipping this summer, and it's fairly compelling. It may not have quite as much range as a Model S, but it's a well-priced car. It's well built by Volkswagen. It's got a good look. It's a crossover SUV.
It's nice looking.
It's actually pretty nice.
Yeah. I don't see anybody talking about competition with Tesla in a meaningful way. Like most of the YouTubers I see talking about Tesla are diehard, like Tesla's going to win and they're going to crush all the competition, end of story.
Yeah.
I feel like the contrarian play there is overlooked people that are already have big manufacturing infrastructure that could actually take a large piece away from Tesla again. I don't see anybody really talking about that. What do you guys?
No, not other than Tesla bears. And look, I don't have a massive bearish position against Tesla. It's just a stock I've kind of avoided, but I just want people to come into it with a rational mind, because like you said, there's too many of these moon boy YouTubers who are just all about Tesla, who have 80% of their portfolio in Tesla and believe that it can do no wrong. And the truth of the matter is Tesla's had the EV market to itself, to their credit, for the last 5-10 years.
Yeah.
But the competition is here.
Yeah.
And there are still issues, that we have to address with the charging infrastructure, particularly in the US. It's a big problem.
Yeah. We have half the chargers than Europe, and
or something like that. It's like, apparently you can't get from certain areas without, there's certain places you can't go in the US because your car will die and you won't be able to charge it. There's so that's a big issue that obviously we have more work to do with getting our charging infrastructure, and the government is trying to do that and companies are trying to do that, but it is a block.
Yep, absolutely.
Sorry for being on my soapbox.
No, I love it. I mean, look, that's what the show is all about, is not to tell people what they want to hear, but to give an honest, balanced opinion and look at what people are overlooking, right? Because that's where you make money in the markets. It's not being in agreement with everybody and saying what is going to make everybody happy. It's where's the overlooked opportunity, or where's the underappreciated risk. That's how we've all made millions. So.
Yeah.
And the other interesting thing about it is, Tesla had its rise too during the right market environment. I mean, the market environment, everything was just aligned for ARK, which was a huge proponent of an investor in Tesla.
Yeah.
And so I wonder how the market environment shifting changes that and changes the actual technical structure of how Tesla trades too. And if it does become, if people do become more fundamentally aware of how their business is actually doing, and are they selling cars or regulatory credits? How's the solar business doing? Is it growing? I don't even believe it is. So that's a whole nother thing. But, paying more attention to those things as the market changes.
It's funny how fundamentals become more important during a bear market, right? Like last year, fundamentals didn't matter, and even in crypto, we see this with altcoins. It's like people don't even research the tickers they're buying. Most people are just lazy and they're like, just tell me what to buy, right? And there's a lot of people on YouTube that are doing that in very sketchy ways, right? Pumping up micro caps and shit. And I don't know, man. I feel like we're at a risky kind of pivot point in the markets, price-wise. I feel like fundamentally for Bitcoin, we're at a very optimistic and promising pivot point, but people just have to pay attention and just think more about risk. We'll get off that soapbox. If you guys have any questions, feel free to throw them in there.
We sound like the old crotchety investors. We're like,
Well, but you know what though?
Matter.
We've been through market cycles. We were trading and investing in '08, right? And I've been through every big boom and bust cycle in Bitcoin's history. And I see what gets people fucked up, right? We see what causes people to blow out their accounts. And if there's anything we can deliver value, it's like learn how to survive, protect your capital, and grow it over time. Don't just try to get rich quick, because you could get lucky, but you will get the rug pulled eventually. All right, one more thing, and then we'll get to some Q&A. Nikki, I know you want to talk about this. Ramit Sethi, I will teach you to be rich. He had a comment that got some heated responses. He said, guy on Reddit, I'm 27, male, $14 million net worth, looking for a city to live in. The city must have good weather, be safe, have low capital gains tax. And then Ramit says, imagine being on track for $100 million in your lifetime, and you decided that taxes are your top criteria for where to live. So what is he saying here, Nikki? And what's your opinion on this?
He's basically saying that, taxes shouldn't necessarily be your biggest priority in life, especially if you have millions of dollars. And it's just, I thought it was a good point of conversation for all of us, because I know that I've been getting a lot of questions from people that are like, I want to save money on taxes. I don't want to pay taxes. What can I do to not pay taxes?
Yeah.
And it's just interesting to hear his perspective here and see the responses that came from it. And it was like, some people were like, yeah, you're a sad person if all you care about is taxes. And then other people were like, it's my money. Like, I want to keep it. I want to save as much of it as I can.
Yeah.
So, I just think that me personally, I think that it's wise to be conscious of tax rates, because you work really, really hard for your money. You take on risk to invest it. And in certain areas of the country or in other of the world, tax rates can be really freaking high.
Yeah.
And tax strategy, in my opinion, I think is smart.
Yeah.
I think it's just smart money planning.
Well, and for most people, taxes are the most expensive thing in their life.
Especially if you live in California.
Yeah. And I think nowadays, people, like investors, have to be careful where they go because of, states and governments now starting to talk about wealth tax and increasing, self-employment tax, all that shit. But governments have to be even more careful, because post-COVID, the mass majority of people realize they can work from wherever. Most white-collar workers that work online, they're like, oh, shit, I can actually do this. I didn't think I could do it, but I did it, and now I want to keep doing it.
Yeah.
So that means governments have to compete for talent and compete for residents. And just like, who was the politician that said fuck Elon Musk, and Elon was like, message received, I'm out, bitch.
And then he came
over here.
Texas.
Right?
Yeah.
So governments have to be careful. Politicians have to be real careful. You start messing with people talking about wealth tax and stuff, people are gonna be like, all right, you don't treat me good here, I'm going over there.
Yeah.
Yeah, I just thought that it was an interesting topic, and because as much as I do agree, and we've had this conversation, as much as I agree with tax strategy and saving money on taxes, the other counterpoint to that is like, well, if you're happy where you're living and you live a great life, like, just pay the damn taxes and like deal with it.
Yeah.
And I personally didn't want to go move to Puerto Rico. That was an option that we were looking at. And I was like, okay, my quality of life in Puerto Rico may not be what I'm looking for. I want to stay in America. How can I stay in America? Let me strategize my taxes, see what I can do, right?
Yeah.
And so there can be this like happy medium of not necessarily having to uproot your life and live somewhere you're unhappy.
Yeah.
But putting some thought into it. To save money.
Absolutely. And more people, like, over the next year, think about this, as more and more people get vaccinated and the COVID numbers come down and people start to emerge, my prediction is that by this time next year, there's going to be the highest, I don't know how to even measure this metric, but there's going to be the highest level of people moving around in the history of humanity, not just in the US, but also globally.
That's wild.
I mean, I think about that. Why not, right? Like, when most people have been cooped up for a year or two, And then a large percentage of the working population realizes they don't have to be beholden to a certain town or city or state or country. They can just get up and, you know, go somewhere where their quality of life is better and their taxes are lower. Like post-COVID over the next couple of years, man, that's going to be a huge factor.
Mm-hmm. I don't think it's right to criticize someone, like you said, for using tax policies as one metric in the calculation of where would they want to live. You know, like if it's, I do kind of agree with Ramit here though, that like if it's your primary deciding criteria and all you're doing is looking to like lower your absolute tax rate, then that might be a little bit short-sighted.
Yeah.
Especially when you think about like there are high tax places in the world that are wonderful places to live in and be part of. And so for me, I think personally it's more about the trade-off there of effective infrastructure and social services and safety versus tax rate. It's like, how do you adjust? There should be like some adjusted metric, like, you know,
like an ROI on what you actually get.
Like I definitely don't want to go pay, you know, 10% plus additional state and local taxes like in a place like California where the governance has just not been great.
Yeah.
Like in fact, like it's been pretty problematic over the last few years and seems to be getting worse. In that case, no, I don't want to pay more tax to go live in a place like that. Although maybe if I was a surfer, I might. You know?
Right, yeah.
Is there a ranking of like government like efficiency, like actually being able to spend money in an effective way?
There probably is. I'm sure it's out there. Like some think tanks, I'm sure have put out that, and I feel like I've seen a report like that. But those are a lot of those metrics are a little bit hard to quantify in some ways. But I agree. Like I think like if you're willing to take on a little bit more taxes to live in a wonderful place, like, you know, that's why some people live in Singapore or live in Norway or whatever, or places in Europe. But
yeah,
I don't think there's one right answer. I think he's, like I said, like just maybe not right to criticize someone for wanting to think about taxes.
Yeah. And this person, I don't know, I'm guessing they probably had an exit at a tech company in California.
Yeah.
And that's why they've got, what was it, 14 million?
Yeah.
Or 14 million at 27. You know, and there's a lot of crypto people in that scenario too, right? We have a lot of people in our community that are like, yo, I've got tons of money now. How do I minimize taxes, right? That is the conversation of 2021.
Yeah.
And with the extra mobility nowadays, like governments have to be careful, man.
Yeah.
Treat people bad, they're out of there.
I think governments need to be on watch, like you said, and think about being more efficient with whatever tax dollars they have. Like raising tax rates not the answer going forward.
Yeah.
It's being more efficient with tax dollars generally.
Yeah. Because I'm happy to pay taxes. You know,
I don't want to pay any taxes.
I mean, up to a certain, you know, percentage.
Yeah.
You know?
Yeah.
I mean, thankfully in the U.S. we've got different states where we can choose which state we want to go to, and there's different policies, different tax policies. But I don't know.
Yep. All right, let's do some Q&A. If you guys have any questions, market related, personal finance related, anything like that, feel free to throw them in there. Brent was asking, can you talk about what would happen if the stock market crashes? Do you think the institutions who finally bought Bitcoin, who never believed it and were late, would they sell for a profit to save their companies? I don't know of any companies that bought Bitcoin at a level where if Bitcoin went down, they would go bankrupt. I know like MicroStrategy bought a ton, right? But they're a SaaS business and like they can afford to have a big drawdown.
In the short run, at least. I think they've got some debt coming due, obviously, in 5 or 10 years on that. But and they may have even actually termed the debt out even further on some of the new. I'd have to look again at the debt issuances, but. Yeah, I don't think it's a solvency issue in the near term.
Yeah, and I don't even outside of MicroStrategy, I haven't talked to any companies or heard of any companies that are like so levered up on Bitcoin that they're like speculators.
Yeah,
it's more like if you're going to own it, you know, most companies are going to have a smaller percentage of their reserves that they know they're going to be a 5, 10 plus year hold. Otherwise, why would you do that? Like publicly traded companies, it's too risky for them to be traders.
Yeah.
Right. Like unless you've got a rogue CEO, but right, Trav, like you can't really see any CEOs or CFOs taking that on.
No, I look at even the firms that have announced like Square and who am I forgetting? Well, of course, Tesla. Like their cash balances and their cash flow generation relative to the actual Bitcoin holdings is pretty large. So like there's not a concern there again with any of those that I've seen.
Yeah.
Now you could see some of the smaller like Bitcoin mining companies, like they could switch from being like, you know, pretty profitable on mining to maybe being break even or less during certain times if Bitcoin goes down too much. And so those little mining operations might have some risk to them.
Good point.
And then there's the multi-strategy asset management firms where, especially the crypto-focused ones, they might need to take position sizes down, because if the whole portfolio on both the crypto and the stocks and bond side are going down, then they might need to reduce some of their gross exposure. So you could see some selling there, some incremental selling in Bitcoin. I'd be surprised to see like mass liquidation of Bitcoin holdings for that.
Yeah.
But maybe some selling pressure on top.
Yeah, 100%. Yeah,
it's not something I would like lay awake at night worrying about, you know?
Mm-hmm. Let's see. Okay. Let's take a look at some charts again real quick. I know a lot of people are watching the price. So this is why I tend to look at like larger areas. You know, usually whenever I mark up an area, it's not like an exact price, right? So looking at like support and resistance, like a lot of times when Bitcoin is consolidating, you'll get these like tweezer top and bottom like trap areas where like it'll fake out, break out, then pull back, make a lower low. Fake out, break down, make a lower high, and then do that like Bart Simpson pattern.
Simpson.
Yeah, it's like, you know, if you ever seen Bart Simpson's hair, it's like up, down, upside down.
I just never heard that one. That's good.
Yeah. So that's why like what I like to do is identify areas of no action, right? So like even jumping over to Ethereum, like this is my area of no action, right? Like I've been reloading since the 300 breakout and then added some through here on, you know, 12, 1400. But anytime you're in kind of like this major like consolidation range, this is where people just get chopped to pieces. And if you're over trading, if you're overly active, this is where you're like, man, how did I just burn like 20% of my account in the last 5 trades?
Yep.
So I pre-identify where I won't make any adjustments.
I think that's good. That's smart. It definitely helps to be able to visually see the big areas on the longer term time frames. Helps with the mental side.
Yeah.
What would be your next move here with Ethereum, depending on like if it wants to test that bottom of the current range? How do you think about that? Do you think about watching and waiting to see if it breaks lower to like exit the rest of your position, or do you say I draw a line in the sand and I buy at that level?
Yeah, so I mean I'm loaded up, and so what I do is I pre-identify like stop zones, right? And until a trend is broken, I don't overthink it. So it's kind of like, it sounds overly simplistic, but it'll keep you on the back of a trend much longer when you say the trend is intact until it isn't, right? Until something shifts materially, either fundamentally with the project, but even more importantly on the chart. And so, yeah, it's either when you're in a bull market, it's either buy dips and breakouts, or depending on where your cost basis and how large you are sized in, you either hold or decide like, okay, if we break this zone, I'm going to cut it off. But
so you're more likely to cut if it kind of touches that support zone, or
not if it touches it, but yeah, if we what I'm going to do is if we break down below this major support zone, which at this point is the sweet spot Fibonacci retracement, the 100-period moving average, the prior all-time high, which was resistance turned into support. If that breaks and we go back into a bear market, then what I do for me is I cut off these ads, and I still have some trend riders from down here in the 300s, but because it went up already, and if signs show that a shift is coming and we're going into an extended bear market, I'm not going to hold a drawdown on these ads, right? Like I'm going to cut it, get more to flat. I'm still long, but I'm just not going to take a drawdown on this size.
On the shorter term trade.
Yeah, exactly. That I can't think of a better way to play trending markets, right?
Yeah.
Like you get in on breakouts, you buy on dips, you size in, you think about position sizing, obviously, and then you let the damn thing work.
If there was a fast enough dip, would you look to maybe make like if it was down 30% in a night, would you potentially add?
Yeah, I mean, it depends on what the market is, but I mean, that's my MO on Bitcoin, right? Like, one of my favorite trades, and I'll just type this on the chart, and you guys can go back test this. Anytime you have a 30% or more dip in less than 3 days, the probabilities of a big bounce are really, really high. Now, getting the exact low is a challenge, right? You've got to understand price action and how to scale in. But that right there is one of my favorite trade setups. The last time we got that was back in March of last year when the COVID thing was hitting, and we basically went from 8K down to 4K in less than 48 hours. That was the best buying opportunity in several years. So that, that's what I look for. Altcoins, you've got to be careful, because if it's a smaller cap or if it's something that's been really hyped up, you could get a 30% panic bounce, 30% panic bounce, 50% panic, and then next thing you know, you're in the long kiss of death.
Yeah.
Right. So you got to try to avoid like the equivalent of like a value trap.
Yeah.
Yeah.
That makes sense.
Yeah. So, oh man, we've been going for over an hour.
Oh wow, that went fast.
Yeah. Let's see. Do we have any other questions we can get to quickly before we wrap it up?
Well, one thing I did want to talk briefly about, and someone asked, I think Stanislav asked about U.S. debt. And one thing we didn't talk about was this proposed infrastructure package.
Is that another trillion or two?
Yeah.
Three.
$3 trillion
What?
proposed.
Yeah, please print that. Yeah, go ahead and just pass that real quick.
You're like, yes for gold, yes for Bitcoin, print away, money printed
man.
over.
I mean, it's really quite absurd. I don't think they're going to have the votes for it, personally. I think it's kind of useless to talk about a $3 trillion infrastructure package right now. But nonetheless, the Biden administration is starting to trickle it out there and propose it and see kind of where it floats.
Yeah.
And that is kind of stunning. We've talked about all the major multi-trillion-dollar stimulus packages that we've had over the last year, some of which I think was helpful and necessary to keep the economy from, just totally imploding during COVID. But now we just had another multi-trillion-dollar stimulus at kind of the tail end, at least here in the U.S., of what's, what the COVID impact we think will be. And then now you're talking about another $3 trillion potentially on top for an infrastructure package. Look, I'm all for infrastructure. I think the U.S. should have high-speed trains, and there's lots of stuff that needs to be upgraded, our electrical grid, et cetera. But $3 trillion, we're running a record deficit already, and you want to add essentially more than the entire U.S. revenue budget?
Yeah.
I mean, holy moly.
I mean, we don't even know what that'll look like.
No.
We don't even know what that's going to do.
Bitcoin will get to 250K quicker than expected.
It would be very bullish for anything that is an inflation proxy and anything that's considered a hard asset or hard money.
We'll have to go long on wheelbarrows to carry the dollars around.
That's starting to get to kind of scary levels of deficit spending.
Yeah. All right, let me scroll up here and just answer a couple more questions, and then we can wrap it up. How are you guys looking to hedge against upcoming I think this is inflation. So how are we hedging? Well, we own hard
Gold,
assets like Bitcoin, gold. My gold position is very small compared to Bitcoin. I mean, we've talked about this a lot.
I don't have any long-term bonds.
Yeah. Yeah. If you like,
Right now.
eroding at your money. Yeah. Let's see. What else, Trav? What else can people do if they're thinking about inflation, right?
Yeah, we've been hunting certain stocks that might benefit from inflation. I don't have a ton of them in the portfolio currently, but there's a few, and I'm watching others for possible entries. Anything that has strong pricing power, that doesn't have a whole lot of commodity input inflation exposure. Think like software companies with strong pricing power. Anything that has a royalty. Anything that does marketplaces that gets a percentage cut of total revenue from the marketplace. Things like that.
Things that can go up and keep up with the pace.
Yeah, where revenues can rise as fast as inflation and costs don't rise faster.
Yeah.
Companies that don't need to refinance a bunch of debt in the short term so that they don't have to go from low interest rates to high interest rates at some point in the future. So you want to avoid anything that needs to refinance a bunch of debt in the next few years. Yeah, so that's kind of what we're thinking on the stock side. I'm still trying to find good inflation plays. There's not a ton of pure plays. I mean, some of the strongest plays that would do well even in an inflationary environment are some of the large tech companies, which we already have exposure there, and to some level. So there's a couple out there I'm kind of stalking. I'm kind of waiting to see if they'll correct a little bit more. But yeah, I think thinking about your portfolio and looking at, in a really heavy inflation environment, how do you think it might perform, I think is a good exercise.
Yep. Awesome. How would you guys compare TA and fundamental analysis in stonks? And does it differ from TA and fundamentals in crypto markets? So that's a good question.
Yeah.
I mean, fundamentals are dramatically different in stocks versus crypto, right?
Very.
Stocks are what's that P word? Profit, cash flow.
Cash flows?
What does that mean?
Yeah. Real tangible money
Yeah.
coming in? Well, maybe. I don't know. It depends on the company.
Yeah.
Some companies are burning cash like hell.
Yeah, fundamentals on crypto are just more so like coin economics, right? Like what's the inflation rate, things like that. What's the promise of the project? It's not so much like, short-term quarterly result focused of profits and cash flow.
The technicals, though, are the same, are very similar.
And Chris has some great videos on his channel going through fundamentals. He talks about tools he uses like Glassnode and things like that, certain metrics you look at. You did, a 3 or 4 part series on
Yeah, it was like a
crypto
5-video
fundamentals?
series on Bitcoin specifically.
Yeah.
Just to talk about a lot of the on-chain metrics, because there's been so much new data that we've got in this market cycle that we didn't have last time.
Yeah.
So
that's one of the best series of videos I've seen on crypto fundamentals. So go check
Awesome.
that out.
Appreciate
if you
it, man.
Watch it. Yeah.
Yeah. Saw a question about is it a good idea to scalp and day trade Bitcoin? Absolutely not.
I saw that too. Yeah.
Yeah.
I was going to say no.
The problem with day trading in general is the data shows over 99% of day traders lose money. So if you're trying to scale in and out, or not scale, just buy in and out hyperactively, you're almost guaranteed to lose money, and you're going to underperform either hodling or doing what we do is have multiple capital buckets where, you can take some swing trades, you can take some multi-year position trades, but the markets are so random on a short-term basis. And the crypto markets over the past, I'd say 3 or 4 years have become more efficient, right? There's more algorithms, there's more competition. The early days, 2013, we were scalping in and out, and it was relatively easy. Nowadays, it's a lot harder. So...
Yeah, I would imagine too, now that we've got more and more institutional investors getting into the crypto asset class just within the last year, you probably have a lot more trading desks at hedge funds and institutional firms now involved in Bitcoin, which is good and bad. It makes it probably a little harder to find totally obvious trade setups, but it also is good from a fundamental standpoint that there are more institutions owning Bitcoin.
Yeah,
and
yeah,
less supply.
and the more diverse the investor pool or the market participant pool, the larger the thing becomes in general, and the less manipulated it can become by a single bad actor, right? So, yeah, awesome. Well, what are you guys looking forward to next week? What's on the docket?
Man, I'm back in the gym, so I'm just stoked about that.
Yeah.
I'm just
Oh,
eyes
yeah.
on the weights right now.
Awesome.
Trying to lose this COVID weight.
Yeah, I feel you on that. I'm looking forward to boat season. Got
Oh,
things starting to
yes.
warm up.
Yes.
Oh yeah.
Looking forward to both of those things. Looking forward to finding the opportunities in this stock sell-off.
Yes. Oh, yes. That's a big thing. Yeah. I've been just
Yeah, why don't you guys talk about that? What are you looking for?
stalking price, lately. I've got a lot of names that I've been wanting to add to or start positions in, and I'm just like, come on, sell off a little bit more, watching price look weak. And it's
Yeah.
actually kind of exciting. It's reminding me of the old March 2020 days a little bit without the severe sell-off.
Yeah.
But yeah, I think that there's going to be a lot of opportunity if the markets can pull back significantly.
Well, the plunge protection team doesn't allow that anymore. Stocks can't go down. It's illegal for stocks to go down.
Yeah. I mean, some of them are down, growth stocks, SPACs, anything really that was a heavy momentum focused stock was recent IPOs. A lot of those are now well off their highs. So I think a lot of those are still actually at pretty rich valuations.
Still, that's the problem. Yeah.
But there's a few that are starting to bubble up and start to look a little more
attractive.
interesting. And
Yeah.
so if we can get a little bit more correction, some of those are going to definitely be entry opportunities for us.
I must be the only person in the world right now that's like wanting the markets to sell off. Like I just want the Nasdaq and the Nasdaq specifically to like just crack support. Just come on, give me a 200-day test.
There we go.
You know, I don't know.
There's a bunch of SPACs that are pre-deal SPACs that are trading below liquidation value. There's opportunities in SPAC warrants, stuff like that too. I know there was a question there in chat about SPACs, so I wanted to mention that. I think one of the strategies is definitely to look for quality SPACs with really quality management teams that you know are going to do good deals. If those are trading at a discount to liquidation value,
That's interesting.
Those can be pretty interesting.
Yeah, awesome.
one
Well,
strategy.
hopefully we get some pullbacks. Hopefully we get some dips in crypto. And just looking to load up. And, just I think kind of a signing off point is that I would say is be careful of the NFT space right now. Like, it's cool. It's here to stay. It's definitely something that is going to develop, and there's going to be more opportunity over time. But people are going to lose a lot of money. That's my prediction. Over the next 12 months, people are going to lose a lot of money chasing bad deals. So what I'm doing, and again, not financial advice, you guys do whatever you want, I'm preserving capital to wait for the first deflation. And after this blows up and the media is bearish on NFTs, that's when I go in heavy. So we'll see when that happens. Hopefully it's this year.
Heck yeah.
Yeah. Awesome. All right, guys. Well, thanks for joining us. Feel free to go to wetalkmoney.com, submit a question for the show.
Yeah.
And we'll see you guys next week. And let us know, do you like these live streams later in the day, earlier in the day? Reach out, let us know.
Definitely.
Yeah. All right. Take care, guys. See you next time.